what I heard Michael Saylor say recently, which I really liked, was like every share over time is going to hold more Bitcoin. So like even though he's printing more shares, it's like
sure. BTC yield.
You're getting BTC.
Every 1,000 shares times Bitcoin yield.
I like that. I'm like, there's no reason for me to, if I'm going to just get more Bitcoin per share over time, even if you're diluting the shares, like as long as my share owns more Bitcoin over time, for me, that was like, that's true.
It is, but that is Bitcoin capitalism.
Yeah, I like that.
Because there are people who would say, what the hell are you talking about? Like, you don't own anything. You own a share of a publicly traded company. That's all you own. So they're not wrong
in a sense, but
no, they're not.
You die, something happens, you lose the seed, your house burnt, whatever it may be. Every level of custody has risk. So to me, spreading out that risk on all these different variations of holding Bitcoin is the play.
Right.
One of our main niches is GPU mining, which there's not many GPU miners left out there, but especially those who operate at scale. That was kind of like my intro to getting into this space, was just being able to fire up a GPU and participate, plug in on just a regular gaming computer, plug into the Ethereum network is kind of where I started. By the time I had heard about Bitcoin, you had to have an ASIC, which we operate tons of those now too, but when you're at home, you can't really operate one of those things super loud. Uses a 220 volt outlet, which is like what your washer or dryer uses. So the next best thing for me was, I can use a GPU. Now there's this new coin called Ethereum that's launching, this internet, computer thing, and decentralized, app marketplace, had all these cool bells and whistles to it. So Supermicro, Gigabyte, we use a lot of their servers and we deploy a lot of their systems, and we're just starting to try to deploy into the AI high performance compute space and kind of take the necessary steps of growth that's required to, because totally different requirements when it comes to mining and then providing high performance compute.
Sure.
So we're starting to bridge that gap.
Yeah.
Consider maybe potentially doing a raise some capital, because as you can see, Nvidia's stock is the best performing stock in the world, and it's like $350,000 per server now if you want to get in the game.
Yeah. So where I was going to go with Supermicro, and everything you said is 100% true, was it came out a couple of months ago that they've had some accounting irregularities, right? There was nothing about the underlying performance of the business. It was just, the auditor resigned. They had some accounting issues, and the stock collapsed. Even though NVIDIA on their last earnings call said they're a great customer, we're shipping tons of GPUs to them, like we need them, no one cared because the market only cared about the noise. And my point being, publicly traded equities are subject to what all public equities are subject to, which is algorithmic trading, hedge funds, high frequency trading. And so at some point, the market's not going to care about the Bitcoin holdings of MicroStrategy or whoever else is going to do this strategy. They're going to have their sell targets. They're going to have RSIs that get too high. It's overheated. And so to your point, if you're going to play that game, I think you can't just play that game, right? Like that's the key is it's a lever derivative. It's like the second derivative of Bitcoin, but it's not the actual asset. And so how the maximalists and the capitalists, because again, Supermicro has an amazing company, but the stock has been crushed. What happens if something like that happens to a MicroStrategy or a Marathon who's doing these convertibles? The stock, which is essentially tied to the bond, that money is going to have to be repaid if they can't pay it back by the end of the bond term. And that's a lot of capital. They'll have to sell Bitcoin to pay back the bondholder. And so the cycle begins to wind.
Yeah.
So
you're saying the systemic risk is Bitcoin, the price of the stock doesn't go up where the bondholders can be repaid, I guess, in stock.
Yeah, I mean, if that's
the risk.
If the share price never hits the strike and it's never actually executed, then that money has to be repaid. And if there isn't cash on the balance sheet, then they're going to have to sell Bitcoin to make good on that bondholder. And when you get enough leverage, if it's not executed, you're talking about tens of billions of dollars in Bitcoin liquidation to pay creditors for publicly traded companies that have nothing to do with the actual Bitcoin supply. It's just companies it's like real estate. They're just selling off assets to cover their creditors. It's no different than any other like mall operator. So sell that mall off to pay the creditors. The same exact story.
It's a potential systemic
risk. Of course. It's so people should be like aware of like it's these levered proxy second derivative plays are You have to know what you're doing and understand
Yeah.
what the risks are over the long term. Because like these are multi-year agreements that these companies are getting into.
Yeah, I mean, it seems like Saylor knows what he's doing. He's been, around for a very long time. But yeah, there's risk in anything you do, and I think he does mention this. He does say like, hey, the risk is Bitcoin goes to zero, Bitcoin goes down in price. That was what he was saying, if I remember correctly from the clip I watched. But if these bonds need to be repaid at 0%, what is it like? Is it paid in full at the end of term? Or can he use the software side of his business to continually start paying these bonds down? I mean, how does that factor in?
I'd have to look at the actual offering agreement, which
that's what I'm curious.
Is subject to like 1933 laws, literally 1933 laws. These laws were written, and so
really, wow.
That's a 100-year-old law is still in effect for these convertibles, which means that speculation is as old as the hills. Jesse Livermore said that, one of the greatest traders of all time, early 19th century or 20th century English trader. But speculation will always be around, and so now there's my only point being is that people who are not into Bitcoin for its truths, decentralization, self-custody, self-sovereignty, a hedge against runaway monetary fiscal policy, and they're Bitcoin capitalists, it's a very different risk profile than just having the underlying asset in of itself.
Interesting. And I agree with you. I definitely agree with you. But I'm here for it. I think, Bitcoin is many different things to many different people, right?
It is. Like, it's a multidimensional chameleon asset class.
Yeah. One of my favorite quotes is like, Bitcoin is the greatest innovation, in human history and the history of money, wrapped up as like a multi-level like Ponzi scheme.
That's funny.
And my thought was, religions are like, there's a lot of faith involved in a religion. And there's definitely an element of that in Bitcoin, but at the same time, there's also immutable truths like, the 21 million, hard cap, this idea of absolute scarcity, the auditability of the blockchain itself.
Sure.
How you can see transactions. So, it's like on the Ledger wallet, I think it's like Verus et Numerus, like faith and math or something like that, or something along those lines. Trust and math, something like that.